Hey guys, welcome to Stock Talk. Today's April 29th at 6:35 p.m. Eastern Time. Let's get right to it. Taking a look at SPY, which tracks the S&P 500 on the 180-day chart using the Thinkorswim platform. We've noticed, I'm going to zoom in right here, and we've noticed that there is a resistance at the gap down candle that is at around 271.36. And that we've also seen that there is a support, at least a short-term support, around 261.53, shown by this horizontal line. And you guys can see that we did reverse on April 25th. And now, what did we have on Friday? Well, on Friday, we actually didn't have that much action. Actually, you guys can see that the volume was quite low. We retested the 20 EMA just to bounce up. And the markets generally fared on the break-even side. What does that mean for the markets? Does that mean there's a reversal back down? Not necessarily, because right now we are clearly seeing some consolidation and that we are moving in the uptrend. If I could just draw this up, you guys can see that we are in fact moving on an uptrend. So one thing to note, and we have talked about this in the past, is we want to be a little careful because we're looking at a small resistance at around 268.32. Why is this a small resistance? Because this was the start of, the gap down candle. But why is this small? Well, this isn't that significant because if this started a major fall to the major support, then we can say that this is a pretty big resistance area. But because we just held this big red candle and then we reversed the day after, this is just a minor resistance area, and when we do get up there we may encounter some resistance, but I don't expect it to be a major resistance. And if markets do continue to pull up, of course nothing is a certainty, but based off of probabilities, if markets do continue to pull up, I'm looking for it to retest the 271 272 area. So I took a look last time, right? In the last video, we talked about this trend where we're looking at the 1-year chart and we see that every time we have a big major turning point, what happened? We had major sell-off, recovery, smaller sell-off, recovery. And right now we're repeating the pattern. Major sell-off, recovery, smaller sell-off. Well, what are we going to do next? Well, the best chance is that we're going to have another recovery. Now, to which area? Now, remember, the markets are generally attracted to previous resistance areas. So this has been the resistance area on the 1-year chart. We've been making lower highs, and that the next probable resistance area is around 271 to 272. Will SPY get there tomorrow? Not necessarily. It doesn't have to get there tomorrow. You guys can see that it still has some time. It might get there early this week. It might get there tomorrow. It might not reach that point, but the most probable area is we will still continue to see this bullish action until we hit this resistance area. And at that point, we'll have to reevaluate to see whether this bearish trend will continue. And this is something we will have to watch closely. So that's what I'm looking for in the next few days. Let's take a look at TVIX, which tracks volatility. And we briefly looked at this last time, and this is really not too significant. The reason this is not too significant is because, yes, TVIX, or volatility, has held support at around $6.76, and yes, it's been dropping as SPY has been increasing and moving up, but we can easily see volatility fall below its support as SPY reaches the 270, 271 area to retest that resistance. So don't be surprised if we do see a spike down, only to get it reversed back up in the near future, which would correspond very well should SPY retest this resistance. Should there be like a spike up and then we get rejected and then for it to come down. So in the near term, I am looking for some more bullish action. I am looking for TVIX to drop a couple more percentage points. Right now, you guys can see that even though the markets were fairly even last Friday, TVIX did drop over 3%. So just think about how that relationship is holding out. Looking at TQQQ, which tracks NASDAQ, one thing to keep in note is, yes, as we're moving higher, TQQQ has a chance of moving higher as well. You guys can see that kind of this TQQQ, which kind of got pushed up Thursday aftermarket because of Amazon earnings being extremely positive, but we did hold over 20 EMA overall on the 180-day chart. So can you guys buy into TQQQ? Well, sure, if the markets do continue to pull up and as earnings come out in the next few days, if markets do continue to test that resistance area and we get up there, then look for probable resistance around the 200 SMA. You guys can see that it's acted as the resistance here, and it may well act as a resistance here. So what's the potential for profit? Well, if you guys are already in TQQQ, you guys can see, oh, let me get that line drawn. So you guys can see that the percentage for profit is probably like 5 to 6%. If you guys do set a tighter stop loss, probably around 2.5%. That is a pretty nice risk to reward ratio. That is something that you guys could go into as the markets are pushed up. And you guys can see that looking at futures. Yes, futures are going higher. Again, this doesn't really matter because it is currently Sunday night and we just have to take it with a grain of salt, but we can see that the futures at the very least are trying to push higher. So we may see a higher open tomorrow during market open. So let's take a look at commodities because we've been talking about /CL, which tracks crude oil futures. And you guys can see, zooming on the 180-day chart, that we do have a support around $67.70 and that we have a resistance at 69.30. Now, recall what happened last Friday, okay? So DRIP, which is the inverse of crude oil, so as crude oil is pushing higher, DRIP is going lower. What happened to DRIP? DRIP actually went up over 5%. And a lot of us were thinking, is this the reversal time? Now, I just want to, there's no one-to-one correlation between /CL and GUSH, right? GUSH tracks crude oil, is an ETF that tracks crude oil. But we can safely say that, look at this, guys. We are still holding above the support. What does that say for crude oil? So at this time, even though DRIP went up 5%, it still says that crude oil is still bullish, and that if you guys got into GUSH, we may have potentially a good entry point, right? Why is that? Look, we've tested this. This was the resistance back in early April. This was the resistance area. When we pulled over, you guys can see that the resistance became the new support. As a matter of fact, look how many times we tested this support. Once, twice, several times here, several times here. Every time we got pushed down, it got pulled back up. That is a bullish sign for crude oil. Now, that doesn't mean that it can just kind of fall back down, but this consolidation pattern is what we want to see when crude oil has exceeded its value. But if it's consolidating, then there's a possibility of it pushing higher. Taking a look at GUSH, G-U-S-H, we've been talking about that all last week, right? So what did we say? We were looking for a close over what dollar? $32. Now, why was $32 such a critical point? Now, recall on Thursday, we actually closed like at over $33. And I was like, if it can close Friday over $33.50, we may be looking for a more bullish push to maybe perhaps like $34 or $33, $34, $35 at that point. But we ended the weekly close down over 5%, back to 31.43. This is significant because looking at the 3-year chart, which shows the weekly, so each candlestick is a weekly chart, what does that say? We know that crude oil has been making lower highs and that the current area is around, you guys can see that the current area is around $32. If we can close over $32, we can effectively say that, oh, we are trying to break that resistance. Of course, we are trying to break that resistance, but have we broken that yet for GUSH? We have not. So what I'm looking for is, again, this week, the same type of pattern. If GUSH can continually hold over $32 to $33, we are seeing more potential for crude oil for days to come. For now, it's trending up, no doubt about it. If you guys have to take up a position, you're like, if I had to choose DRIP or GUSH, which one would you go in? Well, let's take a look at DRIP, right? Which basically is so you guys were talking about DRIP, and let's take a look. 180-day chart. So everyone was like, I want to go into drip and I'm going to sell around $8.50 or $9, right? I'm going to go in because we're so far oversold. We've been falling for so many days. We have to reverse. No, so that's not the mentality, right? Always follow the trend. If the trend says we're going down, then why go into it, right? So we've talked about this pattern on the 1 year chart, looking at drip. We've seen that every time it's every time it breaks the support, it keeps going down, shown by these boxes. Break the support, keeps going down. Break the support, keep going down. And once again, we break the support here, which is a major support. We did go down. But you guys might have started questioning because you're like, well, we see this consolidation pattern. But remember, it's only significant if it's consolidating, if it's pushing over the 20 EMA, and if we're at a potential support. We've broken the support right now. So you guys can see that we did have some sideways consolidation on these days. But did it mean anything? It didn't really mean anything because we kept pushing lower, right? We're having some sideways consolidation now. Doesn't mean we have reversed yet, especially when the 20 EMA is still, desperately trying to catch up with the candlesticks right now. So yes, it pushed up higher, but no, I'm still not looking for a drip entry. No, I still do not see a drip reversal yet. And I do see this trend. Yes, drip did hold very well above today, or Friday, but I'm still not looking for an entry right now. Looking at /GC, which tracks gold, right? We talked about gold. We talked about gold because it broke its support around 1327. At the next major support was around 1312 to 1313. Now, we did see this major sell-off, but what happened during that major sell-off? JNUG, JNUG, which goes with gold, even though gold futures went down, JNUG went higher, okay? So when JNUG did recover back to the 20 EMA, which we kind of expected, you guys can see this, this action, right? That means JNUG still went up 0.21%. Gold is still pretty bullish. Yes, gold futures are on the downtrend, but I am still looking for a JNUG entry in the next week. Now, this is a downtrend, so what am I looking for? Okay, there's a possibility that we'll get rejected by the 20 EMA again and retest the 1312 and 1313 area. But what's more important is I want to see an uptrend on the gold futures, and I also want to see an uptrend on JNUG. So taking a look at JNUG, which tracks gold, we talked about how consolidation patterns have been occurring here. You guys can see that on JNUG, we've been consolidating at 1425, which is the support. You guys can see that we've been going down, but we've been consolidating in this area, and that if we can break over the 20 EMA, this is the possibility where we can take an entry position into JNUG and ride it to where? Well, there's a possibility of it going to 1549, possibility even testing the previous high around 1620. So just watch out for that. I'm looking out for that. In the meantime, JDST, for the people who are in JDST, you guys can see that we are still on a downtrend, right? Drawing these two lines that are making lower highs and lower lows, we can see that we're pretty much near the peak area. Are we going to take a chance with the JDST when it has a good chance to come down? Probably not, right? So let's visit natural gas. Okay, so these patterns were extremely interesting. We talked about natural gas. Natural gas was really interesting because on Thursday night, we did see some sort of this pattern. It broke over its resistance area at 2.806, right? And we were talking about what? We were talking about, can natural gas consolidate at this support? If we can see consolidation at the support, then we will see higher prices for natural gas. But what happened? We fell significantly under. So on this 4-hour candle, we fell under the support. Now ask yourself, do you buy in at that point? And my answer is no, we don't buy in just yet. Because why? Where do we want to buy in if we were to buy into the inverse of natural gas, which is DGAZ, DGAZ? We want to buy in at this candle. You guys can see that at the conclusion of this candle, yes, it pulled higher, but you guys can see that we pulled over the wick, couldn't go over the wick, right? And we closed right at the resistance area. that basically just confirmed that even though it pulled up, it couldn't pull past the resistance area, at which point you could have taken a position on DGAZ. So looking at DGAZ, where can natural gas fall? Well, note that natural gas still has some room to fall. Yes, we are at the support around 2.754, but again, we're looking for some either a show that this is the support. If not, then it could fall perhaps even lower. So looking at DGAZ, right guys? You guys can see that DGAZ has been oversold for a while actually. So where could it, we are at the support around $25.43, at which we did do a bounce. Now, are we going to buy in yet? I don't want to buy in yet just because we have so many. You guys can see that we do have resistance lines very close to each other, and I do like to buy on the bottom. So if I were to take an entry position on DGAZ last Friday, where would I buy in? Well, remember, this candle kind of corresponded to the natural gas candle when it couldn't pull over the resistance. This pre-market candle would have been a good time to buy in, at which point you could have maybe made 3 to 4%, which is not too bad, right? Not too bad. So I wouldn't have taken if you're in DGAZ right now, it's on an uptrend. Surely you don't need I don't think you need to release your position just yet. Follow the trend. But would I take an entry position now? I do feel like since we're a little into the middle of the game, I really don't feel very comfortable for me to take a position. So there's DGAZ. Looking at UGAZ, let's type that in. So there it is. You guys can see that we did go over the resistance only to get rejected. So UGAZ does still have some room to fall, as you can see. So it does have potential to fall. Once again, confirming that DGAZ might still be a good play, but we'll have to see natural gas for an entry point. But no entry point right now. All right, I want to talk about a couple of stocks that you guys called out. The first one is I'm still in the position called, which ticker? Square, right? SQ. So let's take a look at SQ, and there it is. So Square, what was really concerning about me was on the 180-day chart. Here's what was concerning about me. We broke this support at 45.58. And even though we did have this good tail candle, kind of, it wasn't a good confirmation of a tail candle. I wish this was lower. I wish we didn't end below the support. Even though we did get pushed up, it's just a little nerve-wracking. Why is this support, guys? This is support because you guys can see that every time the body of the candle has held over the support. The body of the candle is supposed to hold over the support. It didn't. Yes, we did have a surge up, but look at what's happening, right? We're having a hard time at the 20 EMA. Note that earnings are coming up, which may even shift things even further. And here's another thing that was slightly concerning. Looking at the 3-year chart, I was telling you guys this, right? I wanted Square to close from $49 to $50. Especially when the markets were pulling up. The markets kind of went sideways on Friday. Yes, Square went up 1.78%, but it wasn't as much as I wanted. And you guys can see why that mattered so much. Because we only closed at 47.57, we formed this red candle beside the green candle. Obviously not a very good sign, but at the same time, you can argue that yes, we did bounce off the 20 EMA. So what does that mean for Square? Well, at this time, it's pretty much a watch and see. If you're in Square, it probably is a good price point that we're in, but earnings might shift this, right? We might form a big green candle. At the same time, we might go back and retest the 20 EMA. So this is, this is just something to watch out for if you're in Square. Looking at another ticker. So these are the tickers that you guys called out, all right? So let's start with FCX. Let's look at FCX. What am I looking at? 180 day. So you guys can see that, right? The earnings came out. Probably, the earnings weren't as great. And what happened? We had a major sell-off. So ask yourself, are you going to buy when we have a major sell-off? No, this is... If this is the start of a downtrend, yes, it might kind of do it, you know, you guys call it dead cat bounce, right? It bounces back to the 20 EMA before it, you know, kind of comes down again. We don't have any confirmation of a support. It's on the downtrend. So this is not something I would actively look at or invest in right now. All right. So next one is CRON. So looking at CRON. So here's another thing, right? Here's CRON. What's really concerning about this kind of pattern? Well, you guys can see we had a peak, a lower peak. Could this be a lower peak? It certainly can. Can it do something like this? I'm going to ask you guys, can it do something like this and come down? It certainly can, right? You know, but this is not something I'm willing to risk, because just as you can see this kind of scenario, I can also vision a scenario where, what, guys? Consolidates, it goes down, especially with earnings coming up, right? It goes down here, and then see some consolidation, and then do something like that, right? We just don't know, but what we do know is, right? What we do know is it's on a downtrend right now, and even though we did have a push up, we don't want to take a chance on the earnings. So once the earnings come up, even if it goes higher or lower, this one that won't matter too much to me, because I don't really like this pattern. And you can see that, yes, we did have a surge up from $1.50 to $11.90, but it's been pretty much trading in the middle. And because we have earnings coming, it's just too hard to determine whether this is a safe buy or not. So last one, I think, is CMG. So this is interesting, right? The previous ones we saw, when earnings came up, it went down. This one, as when earnings came up, it went up. So it went up. Wow. How many percentage is that? Wow. What the? So within 2 days, it went up like 25%. Wow, that's pretty crazy. So, right. So this is something, I don't know, you know, what catalyst, why it was, you know, so hyped up. But looking at the volume, right, we had a huge spike in volume. Again, ask yourself, look at the 20 EMA. We're so overextended. I could almost argue that because the hype is, you know, we sell on news, once the news comes out, right, then people want to sell it, and we could easily see kind of a dip back to the 20 EMA before perhaps some consolidation or more bullish action. Now, oh, this is Chipotle. Okay, yeah, I remember Chipotle was doing terrible like a half year ago. Yeah, look at this, right? Earnings came out, came down. There were some like management issues, and it came down again. Did a new low on the 180-day chart before we got pulled up. Yeah, this is just something to watch. I wouldn't bet that this would hold because we went up so much at one time. So let's take a look at the 1 year chart. Right. You guys can see that, right? 3 years. Right. And look at this, right? Let me show you guys. On the 3 year chart, look what happened here. We had earnings which pulled it up. It went a little higher, sure, but look, at some point, there's a sell-off, right? Right now, again, we're overextended. At some point, we would expect some sort of sell-off. So I can even argue that this might be a potential short sell opportunity, but not a buying opportunity because we're so far overbought. All right, that's it for me today. Thank you for everyone's support and comments. I love all the tickers. Like if you liked this video. If you didn't like it, I hope you like it in the future. Remember to like and subscribe. And yeah, course coming out, all that good stuff. More information on that later. See you tomorrow. Now tomorrow's video might be a little late because I'm out of town, so I'll be home maybe 3 hours later than usual. So the video will be out, but it'll just be later than usual. So I'll see you guys tomorrow. Happy trading.